So when we're talking about business funding options with business owners, the subject of SBA loans typically comes up quite a bit, and it's a kind of tricky situation to get into because it's a little confusing as to what kind of SBA loan options most business owners can qualify for, if they're really going to help the business out, et cetera, and if there are better options even out there. So what we're going to do today is we are actually going to talk about the different types of SBA loans, how they work, the pros and cons, as well as how to qualify for an SBA loan. And once we discuss that, then you can make the decision as a business owner if this is an option you want to look into or if there may be something else better for you. Hi everybody, this is Zach Ritchie with Fund&Grow. If you can, do me a quick favor and go ahead and subscribe to our channel and maybe slap a like on this video to stay up to date on everything that's going on with banking, business, and funding to make sure that your dreams can become a reality and help steer us in what you want to see more of on our channel. Now, without further ado, let's talk about SBA loans. Now, let's first talk about what it is not. The Small Business Association does not lend small businesses money directly. Instead, what it actually does is the SBA sets guidelines for loans that are made by its individual lending partners. So the SBA guarantees that a portion of these loans granted by these groups will be repaid even if you as the business owner default. So that eliminates some of the risk for these lenders that could be giving out money. Now, these types of loans can help cover startup costs, working capital needs, expansion, real estate purchases, and more. Now, these loans are an interesting sort of amalgamation because the financing is issued by a private lender, but the backing is by the federal government. Now, interest rates as of February of this year vary from 3.75% to nearly 12%, depending on the lending institution you're getting the loan from. Now, that all being said, there are actually multiple types of SBA loans out there. So let's take a look at some of these variations and what they really mean. So first of all, you got the SBA 7A loan. Now this is meant to be used for working capital, business expansion, or equipment purchases only. The approval amount for these types of loans can be up to $5 million. So second of all, you've got the SBA Express loan. So that's fast funding for working capital, expansion, real estate, and equipment. These loans can be approved all the way up to $500,000. Third, you've got your SBA 504 loans, which is meant for purchases of long-term fixed assets, meaning land, machinery, facilities, things along those lines. Now, the height of approval for these loans is up to about $5.5 million. Additionally, you've got microloans. Now, these loans are reserved for minority business owners, women-owned business, veteran-owned businesses, things like that, and they can approve up to $50,000. In some cases, you've got disaster loans. So that's available to businesses impacted by natural disasters and economic injury sustained by nationwide crises like COVID-19. Because it's going to vary by whatever the disaster was, the approval amounts can vary greatly on this particular type of SBA loan. So now that we know that we've got this menu of SBA loan options, let's go into how do they actually work. So you apply like you would any other loan. However, then that loan provider turns around and applies for the SBA directly in order to get a loan guarantee from the government that basically they will cover a portion of the repayment if you default. Now, right off the bat, an SBA loan requires an unconditional personal guarantee from everyone with at least 20% stock in the company. So this guarantee puts you and your personal assets on the hook for payments if your business can't make them. Now, of course, in turn, both the government guarantee and your personal guarantee reduces the risk for lenders, making them more willing to work with small businesses. So once you're approved for the SBA loan, the lender middleman is then responsible for closing the loan and dispersing the loan proceeds to you. Now, after that's done, you then begin repaying the middleman lender directly, usually on a monthly basis. So we're about to get into the advantages and drawbacks of the SBA loan process. Before we do that, go ahead and slap a like on this video if you've enjoyed it so far. So what are the pros of an SBA loan? So first of all, they are favorable repayment terms. Term lengths are negotiable with your lender and typically depend on what you plan to use the funding for. Oftentimes you'll find that SBA loans come with longer term options than other traditional funding opportunities. So for example, if you're getting an SBA loan specifically for real estate, the term for repayment on that can be 25 years in some cases. Now, if you're not going into real estate, you can have terms that are typically between 7 to 10 years. So again, not a bad option. Now, if you combine these longer timelines with the SBA's repayment guarantee to the lender, it can mean that SBA loans can have lower monthly payments than other traditional loan options. As we said before, in some cases, you can get a considerable amount of money from the SBA. They offer loans up to $5 million depending on the specific needs of your business. However, smaller loans under 50 grand are also available, like those micro loans. Now, that all being said, micro to 5 mil, the average, according to the SBA, is about $108,000 approved. So let's get into that really nitty-gritty part. Credit score requirements are lower with SBA loans than the standards for conventional business loans. The credit score requirements for the average SBA starts around 690. So because of that, it makes it a really nice option for businesses that can't qualify for a typical loan. However, let's talk about the cons of using an SBA loan. SBA loans can be difficult to qualify for outside of the credit score idea. So although your risk as a borrower is minimized, you still have to meet strict eligibility requirements in order to achieve the SBA loan. So typically, you need at least 2 years in business, you need strong business financials, and a decent credit history. You also have to be able to show you have a financial need for the loan. So you need a strong business plan and proof of industry expertise. Now, if you're hearing all those hoops to jump through and you're thinking, wow, that sounds like a lot of work, how many people are actually getting approved for these things? Well, according to Fund&Grow, 90% of SBA loan applications are denied. 90%. So even if you do make it in that 10%, and you get approved, it takes a long time to access the funding. Depending on the lender, it can take up to 3 months to access funding once it's actually approved. There's also collateral requirements for SBA. Now, each loan option is going to require a different amount of collateral, but typically any loan over $25,000 is going to want their pound of flesh. So for instance, with the SBA 7A loan, if you get one of those loans over $25,000, you have to then grab an ABA, an all business assets lien, or a blanket lien. Basically, this means everything your business owns is your collateral for your loan. There's also extensive documentation. SBA requires small business owners to supply a significant amount of supplementary paperwork, ranging from personal financial documentation to detailed paperwork about your business's finances. So on top of the lengthy standard application, you're likely going to be asked to provide historical tax returns for several previous years, including both personal and business, profit and loss statements, balance sheets, projected revenue and expenses. Some loans may even require that you provide a detailed plan for how you intend to use the loan. Also, in some cases, a down payment may be required just to get approved. Many SBA loans require a down payment of 10 to 20%, but the specific amount will depend on what the loan is for and your financial profile. So basically, the lower your credit score, the higher your down payment. It's like trying to go after a car loan. So the question ultimately becomes, is an SBA loan the right call for your business? Now, in my personal opinion, if you've exhausted all other traditional loan options, then an SBA loan may be a good option to look into. But if the disadvantages of an SBA loan make you uneasy, or you're thinking there's got to be some better option out there for you, then I encourage you to look into non-traditional business funding alternatives. Now, one of the best alternative funding sources for business owners is business credit card. It's unsecured, there's no collateral required, it's ideal for startup and seasoned businesses, so you don't need like the 2-year in business requirement that SBA wants. It's 0% interest for 6 to 22 months. It can be used for any business purpose, from buying real estate to buying equipment, software, and more. It encompasses all the advantages of a traditional loan without the same drawbacks. So if you want to learn more about how you can access this type of credit that I'm talking about that you can use to fund and grow your business, I've actually left a link to our free business credit masterclass for you in the description for this video. So in this masterclass, our CEO goes over how to quickly gain access to up to $250,000 of business credit, how to structure your entity so that lenders want to give you funding, how to reveal hidden negative items on your credit reports that cripple your chances of securing business funding, and so much more. So I encourage every business owner to head over there and check it out. And as I said, the link is down below. Now, hopefully this has given you a better understanding of whether an SBA loan is right for your business needs or not. So if there's anything else that we can do to help you with funding or financing your business, leave a comment down below because we'd be happy to assist. So thank you all so much for watching, and we'll see you in the next video.